We get a lot of people asking if Sweater is the same as equity crowdfunding. The short answer is no. Let me give you a little bit of background. Equity crowdfunding is a relatively new phenomenon that came about after the 2012 Jobs Act, but the rules didn't get fully defined and launched publicly until around 2016. It's been a really great way for founders and small business owners to raise money and engage directly with investors, and it has given retail investors options beyond just public markets. So it makes sense that there might be some confusion with Sweater. Basically, equity crowdfunding allows anyone to invest directly into an individual company in exchange for equity shares. The process involves going to one of many equity crowdfunding platforms, researching the companies listed there, and making individual investments directly into the companies listed. Usually, these aren't venture-backable deals with large potential upside. Sweater is fundamentally different. For starters, we're a venture capital fund, which means that we pool from thousands of investors just like you to deploy that capital as equity investments into early stage startups that we've identified as having high growth potential. And because of the risks involved with investing into startups, a strong venture investing strategy requires a large portfolio to help balance these risks. So as a fund, we invest into hundreds of companies, which results in a large, diversified portfolio of private investments. It's difficult to reach that level of diversification in equity crowdfunding because it requires you to do your own research. You can think of Sweater kind of like an index fund, but for private companies instead. When you make an investment into Sweater, you're actually purchasing shares in the fund, which represents the entire portfolio of companies the fund has invested in. With equity crowdfunding, you would need to research and make hundreds of investments on your own to reach a similar diversification that you would get with Sweater. That would be a lot of research to do on your own. So when we say that Sweater is fully managed, it means our investment team handles everything for you, from finding investment opportunities and conducting due diligence, to negotiating the deal and taking care of the investment as it actually matures over the course of years. Equity crowdfunding may have opened the door to the private markets for unaccredited investors, but it does have many limitations. That's why we founded Sweater, so everyone can get real access to venture capital grade opportunities and more people can take part in shaping the future through venture capital.